everyone, welcome to the live show. Haha, good to see you guys. Goodness me. Today we're going to talk about how we can secure our profits and the best way to secure the profits and so on and so on and so on. It's quite interesting actually. Hope you guys are well. Hope you guys have been trading well. I hope you liked the trade of the day today. Bitcoin, haha, had a look at that. Looks quite interesting. Looks like the trade to go for. The future of Bitcoin. I've talked to you guys a lot about Bitcoin in the past. Let me just move my picture out of the way. And interestingly enough, for me, investing in Bitcoin is most certainly not my thing. It's not something I would normally even touch. For me, Bitcoin doesn't have any asset value. Even Warren Buffett wouldn't touch it with your money. So at the end of the day, crypto is not my thing. But when I see something like this, Bitcoin for me, crypto for me, Bitcoin particularly has been taken on by institutional banks. It's been taken on by Morgan Stanley. It's been taken on by all these guys. ETFs have been created for these things. So there's no chance it's going to disappear anytime soon. And everybody's just sort of talking it down at the moment. But the issue with something like crypto is that the whole point of it not having any asset value gives it that scenario where it'll get pushed up and down quite in high volatility because there's no real asset value to it. It's just traders trading against traders, which is what causing this to move around. You can trade anything you like. There's all kinds of different coins out there. So you can do whatever you want. But at the end of the day, this is the one to look at. You can look at the ETH as well and all those different types of ones. But what I was looking at is it's bouncing off the trend support. So I've actually taken this trade on my main account. I haven't taken it here yet. I haven't actually looked at it here yet. Should actually wait for the green candle to close. So I've nibbled it on my main account, and my opinion is that it's at 90,000. I said it would get down to 90,000 based on its head and shoulders, based on all the information we had technically. And my thought is that it would bounce off this lower level. Now, first target would be the 100,000, back up to the 100,000, and then perhaps the 115 and perhaps the 125. So that looks reasonable. That said, keep your stop losses in. It might go to, 80, 70, whatever the case. This is not one for the faint-hearted. As far as I'm concerned, if you're going to look at Bitcoin, you've got to look at the scenario of having deep pockets. You've got to have some deep pockets. You've got to have the heart to hold this and perhaps be in quite a serious drawdown. I may actually take this on this account right now or today and just add it here and see how we go. But yeah, at the end of the day, this is looking like a reasonable trade. And then if you look at the US 500, the S&P 500, and when everybody's here, I see everybody's not here yet, but when everybody's here, I'm going to go into so how do you secure your profits, and the best way to make sure you secure your profits in the market and not lose money, let's say. A lot of people will just bounce out of their profits and just take their profits quickly instead of going for that full target, instead of you want to make more on your wins and lose less on your losses. And if you're just jumping out every time there's a bit of green on your trade, you're not going to do that. You're going to have an issue with the amount of profits you make. This is the S&P 500. Seems to be, the Bitcoin seems to be following the S&P 500 quite closely at the moment. It seems if the indexes go up, then the S&P 500 go up as well. So, yeah, it's an interesting thought. Are they following each other quite closely? Is it an economic issue? I hope you all turn up soon and then we can get on with it, but we'll see how we go. See if we have an interesting day. Where have all the traders gone? Perhaps it's a bit early for you guys. See, all the times moved in the Europe and it's changed the timing of the show, so we'll have to see. I might have to move the timing of the show out a little bit, but we'll see how that goes. At least the guys in South Africa should be here. Sir Lunch, good to see you. SLA, lovely to see you guys. Wonderful. Okay. United States dollar, Canadian dollar. This was an interesting one. Nice short trade down. It's gone into this level again, circled around, started to break back out to the upside. I must actually take this out of here because I certainly don't want that anymore. Started to circle around, go back up again. Looking rather interesting. So you can actually take this, move it along there, just to see if it's going to do anything untoward, if it breaks to the upside, whatever the case. It might be an interesting trade to the long side, quite frankly. It doesn't look too bad at all. United States dollar. Gold. What's happening with gold? Sure, a lot of you guys have been trading gold. in the most interesting way. Now, it went against us and it's come back and it's going into the short direction again. Note how it's broken the structure. It's taken that structure out in a big way. In other words, you got this little mountain to climb here. It almost looks like a sort of slight head and shoulders. And it's sort of gone through this trend support, broken straight through it, but at the same time, it's broken through a major support level, which would have been a resistance level as well. So that was the midterm one that I put in on the 40-50, which was actually quite interesting. Last week I put it in, and it's broken through that, and it's broken through the trend support. So that level is a big level of interest. But then you've got this level of interest at 39.50 as well. It was in between that. Remember, it was trading up and down inside that range. And that range, it broke out of that range, and we thought, okay, there she goes all the way, and it's turned around and fallen back down into that range again. Will it break below that range and fall flat? Well, remains to be seen. But while it's in that range, it is a bit tricky. But this is a short trade at the moment, and it looks like it's heading on to the downside. So it is coffee with Rob, so let's have some coffee. Once everyone's here, we can start talking about how you secure your profits and the best way to secure your profits in the market. I took the Brent crude oil trade with a thought that it was going in the right direction at the time. It looked good. I mean, that level was actually further down and it had broken through, but now I've moved the level out because things have changed a little bit, and now it seems to be getting squeezed. There is a level here, like a full-on support level here that it's sitting on, keeps bouncing off of that. That's an area of interest. And then, of course, there's this trend support here as well. If this keeps going green, keeps bouncing up and does decide to go to the upside, then it'll probably go quite far. It'll probably head on all the way up and go for target. But, you know, Brent crude oil, on the other hand, it's a bit like when I'm looking at crypto now, I'm looking at this and thinking, you know, in all my time of trading, oil in the 60s is cheap. Oil in the 60s is not an expensive buy. And I know you know, I call it the supermarket mentality, but at the end of the day, I've seen oil for many, many years. And oil in the 60s is not expensive. Oil can go to 120. Oil runs on an average at 80, 70 and $80 a barrel. So 60s is pretty cheap for oil. And that's why I'm kind of looking at this and thinking, hold on to that. That looks like a good trade to hold on to as well. So you'll notice on Friday, I traded out of all my trades for the weekend, because I'm not happy with these Friday afternoon lapses in the market where things have been falling. And I don't know if you noticed, every Friday afternoon, the markets have been very quiet and very down. And that is almost like a little red flag for me. So I traded out all my trades on Friday, except Brent crude oil. That one I held on to with the thoughts that it might do well. Now I hold this United States dollar South African rand on another account, holding it long. Again, a little bit concerned about it because it does appear to be, you know, messing around a bit, but it's going up. It's going in the general direction. So that one, yeah, it looks all right. Looks okay. I will see. The German DAX yesterday, when I looked at the German DAX yesterday, I was like, wow, look at that. That's taken quite a big knock. But if you look at it, it's in the range. And it's heavily in the range. So if I look at this, it's bouncing off the support as well. Are we bouncing off the support? Are we actually hitting support and bouncing? Because if I look at the scenario, like it's like with Bitcoin, you know, when you look at Bitcoin, Sir Lunch doesn't want to touch oil again. But if I look at Bitcoin, this is heavily oversold, and it's looking like a trade worthwhile looking at for a buy. I'm just a little bit worried that these candles are not doing exactly what I want them to. But you know what? I'm actually going to take a long-term buy on this. I'm going to put the stop loss down at quite far down, actually. I'm going to put it down at 78,000, just to be fair. And I'm going to put the take profit. I'm going to put the take profit all the way up at 125, just for the hell of it. We can negotiate the trade as we go. Ain't no way we're taking one lot there. It might be 0.01 to be fair. And yeah, wonder if it will allow me to take less. No. 0.1's the smallest I can take on this. 0.2 is a $250 stop loss. Okay, 0.02 of a Bitcoin. Yeah, let's buy it and let's leave it in the market, and we'll hang on to the drawdown as we go. Let it go. Nothing wrong with that. Yeah, you know, looking at the DAX. Okay, so that's a Bitcoin trade. That's a long trade. I'll put it on here as well because I do have it on my main account. But on my main account, I purchased it at around 90,000. So this one is at 90,900, nearly 91,000. So there's 1,000 points difference. I'm actually in profit on the other one, but this one, we'll see. We'll see how that goes and see what it looks like. The DAX, you know, what I would do on the DAX, that being it has hit support, could bounce. Wait for the green candle to give a confirmation there as well. I should have waited on Bitcoin, but I've already got it on the other account anyway, so I'm just adding to it. The DAX created a head and shoulders here. That does concern me because that head and shoulders could project down to right 22.8. So I just got to wait for this to break above that last high maybe and just give us an indication that it's going to go to the upside again, because the DAX is showing a little bit of weakness here. That could be tricky. So yeah, it's hit support, strong support. A green candle to the upside could point it back up again. It is heavily oversold as well. So yeah, you're going to probably get the bounce. So there's 10 people here at the moment. So what I'm going to do, I'm going to go over the course, and then those that miss it can come back. And they can just come back and watch it again. Just come and see what we're doing and how we're doing it. So the way we work, let's talk about how you manage a trade, how you take your profit, how to secure your profits. Because what we do in the market is we're very quick to take a trade. We take this trade. So this is the Bitcoin trade that we've just taken a few moments ago. And what we tend to do is we tend to take the trade, put our risk in place, which is at the $259.87. It's actually a $250 loss because we manage our trade. You know how we manage the strategy. So by this point, you should know how we manage the strategy. And that is, in my case, I'm managing 1% per trade. So in this particular account, we're managing $250. We're saying we'll put our stop there. And then we say we want our target up here at the 125, the high. So we're looking for $680 profit on a $250 loss. The thing is, we're not always going to reach that profit, number one. And number two, if this thing goes into green after it's been in drawdown for a while, and it goes into slight green, $50 profit, what have you, the psychology and your impatience is going to say to you, take that trade, take that trade, take that trade. You're going to try and take that profit. You're going to try and click out and take that $50 or take that $100. It's actually a worse psychology than the psychology of stop or dollar cost average, or when it's in a loss or trying to double up. The worst psychology is when you're in a profit after you've been in that scenario and it's sitting in the profit, showing you a little bit of green, and you're thinking, ooh, I want that. I'll take that profit any day. And you don't want to do that. What you actually want to be doing is, rather than taking that profit, is the very simple process of, this is what I always do with my profits, is I'll wait for this to go into the green and to go about $150 into profit, $175, somewhere there. Then I'll say, why am I risking a $250 loss on that? Because that's effectively now a $400 loss. So what I'll do is I'll take my stop loss, simply move it up to cost. Move it up to cost, $5 in profit for costs. And so there's my stop loss up at cost. So now this trade is completely free. Now, the way you have to look at a trade when you take a trade is, I've taken this trade, and this trade is now costing me $250. Write that money off. That money is gone. I'm going to lose that money. But then when it goes into a profit of, say, $150, instead of clicking out and saying, oh, we'll take that profit and run, look at it as, I was risking $250. Now I'm going to take it up to cost, put it at zero. Now this trade's costing me absolutely nothing. Now this trade is completely free. Now I follow it up. Now let's say the trade goes above a level. It breaks through this trend resistance at $100. It's making me $300 profit, and it's looking really good. Now there's two things you can do here. You can be cautious, and you can take your stop loss up from cost, and you can move it up to say $150 in profit and wait and see if it continues up. Or you could do that, and you could double the trade, add to the trade, or add 25% or 50% to the trade. Make the trade bigger because it's breaking out, it's breaking to the upside. So you're looking at a better trade. So you could do that, or you could just be cautious and just move your stop loss up $150, $160 in profit. Now it goes much further up, goes to 115, close to 115. Now you're thinking, man, I need to take those profits. I'm like $500 in profit. I need to get out of here. No. Now what you do, you take your stop loss and you move it up. $400 in profit, $375, somewhere close by. And now my stop loss is right up there. I know I can still lose that money when it comes back, but who's to say it's coming back? It could be going all the way to 125. Now I'm following it up with my stop loss. I'm following this trade up. Now, if it breaks through the 115, you've got a choice to make. Again, just like you had a choice to make earlier on. And that choice is, do I add to the trade or do I just move my stop loss up? Now, at that point, with a breakout there, you could add to the trade again because you've got another level. It's breaking through that level and it's moving on further. So now you could say, I've got a new trade. I've actually got another third trade that I can take on this product. I'll add to the trade again and make the trade even bigger. So at the end of the day, if you've added to your trade here and added to your trade here, you could be sitting with, instead of a $680 profit, you could be sitting with a $2,100 profit with what started as a $250 possible loss if you've added to your trade. But if you haven't added to your trade, you're looking at a $700 profit. But when it gets to the $700 profit, do you click out? Do you say, well, that's me, I'm done, I'm going to click out of my trade now? No, you don't. You look at it and say, there's $700 in my pocket. I'm going to take my stop loss, move it right up to maybe $600 in profit and just see if it keeps on going, because it might just keep on going. And if it keeps on going, you just keep moving your stop loss up behind it. Same goes for if you've got 3 trades on now, and this is now making you $2,100. That doesn't mean now that suddenly you must click out because it's such a big win, because it would be a gargantuan win. Let's say it started at $25,000 loss, and suddenly that's a $700,000 win or something equally ridiculous. You know, you don't want to be saying, oh, it's such a lot of money, I need to click out. What you want to be doing is just putting your stop loss up as close as possible, and then just keep on following it up, because it could go to 200,000. It's Bitcoin, for heaven's sakes. So this, I mean, all of these gurus and all of these crazy people out there are saying Bitcoin's going to 200,000, Bitcoin's going to 1 million. These are the things people are saying about this particular product, and now you're in. Why would you want to trade out at 125 with the possibility that it can go all that way? So at that point, then what you want to be doing is saying, I'm either adding to my trade if it breaks out of there, or I'm following it up and I'm following it all the way. And that's how you manage getting out of your trades. That's how you get out of your trades. The only time that you click out of a trade is, firstly, if you're in a loss and you don't like the loss is, it looks like this trade's gone invalid, it's not a great trade anymore. Let's just click out of it, let's let it go. Those are the best clicks out of trades ever, because you're just taking small losses and throwing it in the bin, get rid of it. The other time is if it's in a profit and you just feel like this trade's going nowhere, it's just milling around, it's doing nothing, it's wasting your time, it's costing you in fees and so on, let it go. Then, okay, sure, you can click out of it, let it go, you're tired of it. That's another reason to click out of your trade. But other than that, there's no reason to click out of your trade. For example, I'm $4.80 in profit, $5 in profit. Let's click out and take the profit. No, you don't do that. Just leave it, let it run. The whole point of your trade is you had a plan. You made a plan to trade. And in that plan, your plan or your strategy was, I'm going to risk 250, I'm going to make 700. That's my my overall plan. The best laid plans of mice and men, they don't always work out, but you can try, and you can try and make it work out. And the best way to do that is to try and just follow your stops up, trailing stop behind your price. Do the trailing stops manually if you can, and you will end up with a whole bunch of small wins, because there'll be many times where it comes back and takes you out for the smaller win. You just have to accept that. That's trading. You just put it in as experience, and you put it in your profit bag, and you say, well, at least I made a profit. And that's as simple as that gets. And that's all about how you take your profits and how you secure your profits in the market. Quite easy, isn't it? It's straightforward and it's simple. Like I said, every single live show, I'm going to give you guys a little bit of insight of the stuff that I've learned over the years and the stuff that's helped me over the years that can maybe help you. Let's see who's here. Okay, let's have a look. Peter's here. Good morning, Peter. Okay, Nick Stroll, that's ambitious. It is ambitious. It's very ambitious. But you heard what I said, Nick. They're all talking about going to 200,000, going to 1 million. And that's what's caught my mind. So ambitious. What I've done, I've put my take profit at the high, and instead I could have put it here at the 100,000 and said, oh, that's my trade. But no, I've decided this is a bigger trade than that. There's more to this than meets the eye. And look, obviously, if it gets to 100,000 and I've put my stop loss up behind it and come back and take it out, I accept that. I accept that it's going to get out at an earlier level. But I'm hoping that it keeps going. And I can follow my stop up behind it and keep following it all the way up. And we can make a lot of money out of it. You know, the probabilities are there, but it might not happen. I mean, I might have a 25% chance of making that target. I've probably got a good chance of making the first target. So be it. You know, that's kind of how it is with trading, as long as we get something out of it. Okay. So yes, I agree with you, Nick. That's very ambitious. Yesterday's DAX short was closed earlier and I missed out on so much more. Feels horrible, to be honest. It actually feels more horrible to miss out than to actually take a loss sometimes. You'll be surprised. I'll agree with you on that. I'll tell you what, it really can feel quite terrible to miss out rather than take. For example, you're watching Bitcoin. Why am I talking about Bitcoin so much? I don't even like crypto. But anyway, you're watching this and you're thinking, I want to take that trade. I want to take that trade. And then you miss out on it completely. That's probably the worst thing when you look again and it's 105,000 and you wanted to take it at 90,000. You think, why didn't I just take that trade? You know, or why didn't I just add to it? Why not? It's the worst. It's actually worse than actually losing. I have to agree with that. That is true, Sir Lunch. Hello, Carl. Good to see you. Elevation, yes. Good morning. Good to see you as well. So Lunch says, I love BTC now. Well, I'm having a bit of fun with it. As I told you guys many weeks ago, many months ago, many moons ago, that as far as trading goes, I'll trade anything. Even if orange peels are tradable, I'll trade them because it's a tradable item. It's something you can trade. When I talk about Bitcoin in general, though, and I say to you, I want to invest in it, I won't invest in it. You know, I'm not an investor in crypto. I'm a trader in crypto. So I'll trade this with a view to managing the risk, to watching it, to keeping an eye on it, and I'll put a stop loss in place and I'll do it the way it's meant to be traded. But to sit and forget and to invest in it, that's not my thing. You see, with that, I have to have something that holds some kind of asset value, something that's got some kind of basis to it, something that's going to kind of pay me dividends over time and give me something back and, you know, general smooth growth, etc. And those are shares, and shares do a lot better with that scenario. And, you know, anyone who questions my theory on that, why don't you just go and ask the richest man one of the richest men in the world, Warren Buffett, because he feels exactly the same way. Why don't you go and ask the biggest scammer in the world, Jordan Belfort? He feels the same way as well. So, at the end of the day, guys in the know have spoken about this. Even Jamie Dimon spoke about this. So, yes, we all agree that it's not the greatest secure or the most secure investment in the world, but it does have its quirks, let's say. And what I look at with crypto is, because so many big people have now created these exchange traded funds, there's so much invested in it, there's so many big companies now investing in it, and it's being held up as a too big to fail scenario. It's still fresh air though. It's still traders trading against traders. It's still people trading against people, more than it is a growth asset. It's really not a growth asset. It doesn't have any weight. It doesn't have any assets. It doesn't have any asset value. Who do you turn to if it does go pear-shaped? For example, who's responsible if Bitcoin goes down? What people are targeting with Bitcoin though, and this is something you need to understand. The whole idea that Bitcoin is capped at $21 billion makes it sort of attractive to the people that are investing in it and buying it, in the sense that, for example, if you invest in gold and gold doesn't work out for you, there's gold. Let's say gold doesn't work out for you. When you invest in gold, they've got the ability to dig up more gold if there's not enough gold. They're going to go dig up some more gold, and that'll affect the price because now you've got more gold. It's the same as money. You've got a value on the US dollar, and if you want to change that value, you just make more dollars, and it's going to reduce the value because you've just added more. And you've sort of watered it down. It's like watering. If you make concentrated orange juice and you water it down, it gets more watery. Now, that's kind of the same thing as you're doing with this. But with Bitcoin, it's got a finite amount. They've said at 21 billion, that's it, we stop. Okay. And they've already got 19 point whatever billion out in the market. The idea is that because there's a finite amount available, that the value is going to increase because there's a finite amount available. Therefore, people are buying it with that view that when it gets to the point where you can't get any more, it's just going to exponentially go up in value. And I kind of agree with that terminology, but it still doesn't hold any asset value. It's still traders trading against traders, and the value is based on pretty much what we say it is. So we're basing a value on the fact that, we won't be able to make any more Bitcoin. We've got a finite amount of Bitcoin. So we're going to put a value on this imaginary gold coin, because that's what it is. It's an imaginary gold coin. It doesn't really exist. And but that's what people are basing it on. And that's why so many big institutions want to jump on the bandwagon and try and make a quick buck out of it. And when I say quick buck, I mean, I don't mean 5 minutes. We're talking about a few years here. But they are going to ride the wave before it gets taken down, or before something happens to it, or before it goes pear-shaped. But they want to ride the wave while the wave is there. And that's what people are doing. And that's what the basis of so many people saying, oh, Bitcoin's going to go to $1 million. And that's because of that whole idea that the value is going to exponentially go up once it hits the finite amount, which is very soon. Like I say, I'm not a big fan of crypto. I think everybody's going to wake up one morning and it's going to be a disaster. That's why I only trade it, and that's why I manage my risk on it. Hello, Dave. Good to see you again. Hi, Gordon. Have a runner on MNQ right now, working the strat. Fantastic. Hi, Fani. If governments allow people to pay taxes with BTC, that would change a bit. You see, the whole thing with Bitcoin is what they're doing is the governments are starting to step in and make people pay tax on crypto. And they're starting to monitor it a little bit more. It's not going to change everything, but it is going to change the way people think about what it's worth and what it is. Because at the end of the day, if you think about your normal currency on a day-to-day, you live in the US, you got the US 500, you got the US dollar, you're invested in these stocks, you're invested in these indexes, you're invested in the US dollar. When you go and pay for something, how often do you use cash these days? In fact, I've been to many a shop where they actually tell me, oh, we don't accept cash, which is the most shocking thing on earth to me, because when I was younger, that's the only thing we had was cash. So suddenly there's all this like, we don't even want cash. Now you're paying with your cell phone, you're paying with your watch. What's next? And I look at this and I say, so we're all talking about digital currency here like it's something special, like crypto is something special. But effectively, the US dollar, the South African rand, the euro, they're all digital anyway. They're just, the only difference is they do provide you with a cash amount. So that's a digital currency on its own, and eventually they're going to take cash away completely. I see already, even here in South Africa, which is for me basically a third world country, they're already removing all the ATMs. In other words, you can't go to an ATM and line up and get cash anymore. There's only a few in certain specific spots. So cash is going by the wayside. Cash is no longer a necessary evil. So in other words, all currencies are slowly falling over into the digital space and becoming digital as we know it. So when we go to the shops, we pay for everything digitally. But the strong point of a country's currency, like the US dollar, for example, or the euro, is it's based on some kind of asset value. It's based on the reserves, the money movement in the country, the value of the US dollar is based on the value of America, the value of the business, the value of everything, how much value is in the country, the asset value. So whatever happens in that country, that dollar is based on that. It's not just based on fresh air. There is a bit of movement around, floating around with a view to the different currency values against each other. But at the end of the day, the currency itself is based on what's happening in that country, and it's got some repercussions, some asset. Whereas Bitcoin, you can't go back to America and say, oh, my Bitcoin's gone, what do I do now? Not their problem. Bitcoin is in the air. It's fresh air. It's got no, what's its asset value actually based on? It's based on something called a blockchain technology. It's based on something called the internet. And the internet doesn't belong to anyone. So that kind of leaves you with a problem at some point, because at some point, the governments of the world are going to turn around to you and say, well, we're going digital now. Everything's a digital currency. And you're going to say, but I want to use a currency that's not monitored by the governments. But you're going to be batting up against the wall, because they're going to start monitoring that as well. They're going to start taxing that as well. So suddenly it's no longer a currency that's free and easy, that's got nothing to do with them. Suddenly they're watching that just as much as they're watching the own currency. So either way, there's no freedom. They're going to be watching you at all angles anyway. So there's going to be no real value in holding crypto. You might as well just hold the normal digital currency anyway. They're going to create their own digitals, which is already created. Bitcoin won't stand a chance. So all this call of it going to the moon is great, but I think when they get to the moon, they might just be disappointed. My feeling on the matter. Not financial advice. Nothing I say here constitutes financial advice. I know nothing about cryptocurrency, and at the end of the day, it's just my point of view, my stupid point of view, and it might be relevant, it might not, but it's just what I see, and maybe you see it as well. I don't know. Okay. Actually, the funny thing about shops not liking cash, Nick, what I've noticed, and I owned a couple of retail stores, and that's why I know about this, and I used to take huge sums of cash and have them deposited in the bank. But the banks charge so much to deposit cash. Huge, gargantuan amounts of fees to deposit cash. And that's where the problem comes in. And that's why a lot of shops are steering away from the cash, because you can negotiate on your credit card machines and your electronic transactions a very low percentage amount. I know that a small store opens and they get a little machine. I mean, they might get charged up to some horrific figure of 7% or whatever, and they're normally about 3 or 4%. I mean, but at stages, I was able to negotiate with these guys for like a 1 or 2% fee on the digital transactions. And then when you take cash to the bank, they would charge like 5% or whatever to put money over the counter, which was massive, massive, massive. So what I used to do is I used to pay my suppliers with cash. I'd go and deposit it in their bank accounts and let them pay the fees for the cash deposit. I paid my bill, I paid it with cash, you know, and then I would save on the fees of the cash going into my bank accounts, and then my bank accounts would get digital payments into the accounts. That's when I had some stores and some businesses and things like that running around in the background. But yeah, that's one of the main reasons that stores don't want to hold cash. But as businesses, I loved holding cash because it was a great way to have money, and you know, that wasn't really going through a main system. So I loved cash as having businesses. It was fantastic. But putting it in the bank was not so fantastic. It was expensive, and that's the main reason that businesses don't want cash. It's not really so much about being robbed, because you can get the cash out of the store every day. You can get the cash out of the business on a regular basis. You don't have to keep it. But yeah, it's about costs. Cash is expensive. Cash is a very expensive entity at the moment. They've made it like an expensive thing that you don't really want to hold. So those of you that have just got here, those of you that are late, I did go over how to secure your profits in the market when you're taking profits, and how to take the profits. It's earlier on in the video. So if you want to go back and have a look at that, do so. It's actually quite interesting, perhaps. So here's the United States dollar South African rand. I took this trade on another account and it's looking quite good. Took the long trade here and she's moving up quite decently for a change. This one, I do have a target at 1750. I haven't gone mad with it. I'm hoping it'll sort of get up there, but as I showed you guys in the beginning, the way to take your profits is to follow your stop loss up behind your profits. It's the only way to trail your stop loss up behind whatever profits you might be making. I see it's a very small viewing here today, guys. So we've got a small group here today. I think the timing might be a little bit out with regards to between the South African time, the European time, US time, that sort of thing. So I might move Tuesdays around just a little bit. I'll see how that goes. Like I said a couple of days ago, I want to see if it's going to be necessary to actually change it and move it about and move it into a different time zone. But we'll have a look at that and we'll see if it makes any difference. I see. Oh, sorry, I forgot to answer that question. I did see your question earlier. Do you draw all your trend lines on the 4-hour time frame? Actually not. But what I do is, you know, as a trader, you become lazy, right? So effectively, what you should be doing with your support and resistance is taking it to the day chart, okay, going up to the day chart and grabbing your levels off the day chart, and then taking those levels and saying, well, that's a daily level, that's a daily level, and then going back to the 4-hour chart and working it off there. But with experience, you kind of get to know things and you kind of get to see where things are, and you need these interim levels anyway. So what I do is I just, on the 4-hour chart, if I see a level, I take it. And it's very easy to spot a level. Keep it simple. Don't get complicated. Don't have a million things and lines and stuff on your charts. It's just a waste of time. So what I do from my side is I just look at, there's a level. I can clearly see it. Look how many times it's hit that level. There's clearly an area of interest there. What is a resistance? It's a liquidity area. It's an area where there's a lot of orders. It's an area where there's a lot of money. How do I know that? I know that because every time it gets there, it gets pushed down. Every time it gets there, it gets pushed down. What we have to understand about these areas, though, although it looks like the more times it hits it, the more interesting that area is. It also has the scenario of the more times it hits it, eventually it's going to break out and go away from it. And why is that? Because it's like chipping away at a wall. Eventually you're going to get through. Eventually you're going to chip through. And these little prisoners chipping out of their cell, eventually they're going to get through. And that's kind of what happens with these levels as well. So there's a point where these levels fail. And then you see this and you think, oh, that level's failing. And then it comes back into it again. No, the level succeeded to hold its place. And then you'll find them at the bottom as well. And the best way to determine a level, whether it be a trend, whether it be a support, whether it be a resistance, is to look for the 3 touches, at least 3 touches. 2 touches, you can sort of look at the direction. But 3 touches that's kind of a confirmed level. That's a level where you look at it and say, that's a good level. I'm going to work with that level. There's 3 touches on it. And that's why I draw these trends within the ranges when they're on when there's a whole bunch of levels touching it, and I know that it's structures breaking or structures changing or whatever the case. But yeah, mostly I just look at it on the 4-hour and I just nail it in. I know that my earlier teachings and most of my teachings, I try and teach you guys that you should go to the day level, get your levels off the day, and then come back to your 4-hour and just check where your day levels are. It's important, but for me, I've gotten so used to this over the years that I just know where I am, and I just nail a level in. And these straight lines as well, you should be drawing in the blocks. You should be drawing it in sort of in an area like that and saying, well, that's the actual area, because you know there's the flat top and there's the little wick, and you sort of draw that along and you get the level that it's in. There's like more of a level, there's like a space there, because you know the market doesn't work in straight lines. So I get lazy and then I just draw in a line. But I know that around that area is important, because you know the market's not made of straight lines. You're dealing with human beings, so you're trading against other human beings. Human beings aren't going to go 0.9567.302 whatever. That's the point where we're going to turn the trade. No, they're going to be in a general vicinity around number area. 1750 is most likely this area, because that's 1749. It's 1750, somewhere there. In that general vicinity, within a few points, all the traders are going to be looking at having their orders around that area and that liquidity. And that's why we were drawing those rectangles in quite frequently, especially on the day chart, because it's an area of interest. It's an area of interest where there's a lot of orders. The reason I just draw a straight line in is because firstly, like I said, I'm lazy. I don't want to sit and draw all the blockies in. And I just put it there. There's a line. I know that area is interesting. Now I'm just looking in that general area of what's going to happen. I'm not saying that if it breaks through that line and just on that line, or it turns on that line, I'm saying in that area if it breaks down, in that area if it breaks up. See, if there's a candle wick goes through there, doesn't bother me. It's not important. It's in that area, so it's fine. So we work on sort of, everybody thinks the market's seriously objective, but you've got to be a little bit subjective. You've got to look at the market as you're dealing with other people, and you've got to start thinking in their minds. How are they thinking? Why are they thinking that way? Because it's not a retail trader that's thinking that way. It's institutional money. There's a lot of money being moved around, which is causing that market to move in that direction. And that's important to understand. So, yes, that's a long answer for that short question. But yes, I do. On the 4-hour, I just draw the lines in. If I was trading on the 5-minute, I would do the same thing. But on the 5-minute, I would be more cautious. I would be sort of spending more time looking at the higher time frames, because it's important to know which way the market's going on those lower time frames. If you're trading on 5-minute time frames, it's incredibly important to know which direction the market's going in, and then trade all your trades in that direction. Whereas on your 4-hour and your day, it's not really that serious. You can counter trade, you can look at your trades, you can give yourself drawdown space. For example, on that Bitcoin trade that we took earlier, and we said, hey, you know, let's take this trade. but understand that you might be in drawdown for a while. It might go into a negative for a while. That trade, I mean, you look at the trade and you think, you know, how am I gonna take this on the exact spot or whatever the case? No, you can just let it run and just grab the trade in a general sort of area. People are trying to be very objective with these trades. You can't be that objective. You've got to be a bit more subjective. Is there a big difference between Forex and futures? Can I use any strategy? I'm still really new. What is the best class to watch to learn besides yours? Of course. Go down and have a look at the book names that I've recommended down there, and go and look for them on YouTube for free. Those ones. But other than that, you know, what's the best? The best is to keep it simple and not confuse yourself, and don't be looking for shiny tools on a regular basis, because that's what most people do. They spend most of their time looking for shiny tools in the market, looking for systems, and you're going to find yourself in that never-ending cycle of doom, looking for shiny tools. The important thing is to understand that the system is the charts. The charts won't make you money. The charts are 50-50. Charts cannot predict the future, neither can you. And it goes back to the old time in the market. You can only make money by having time in the market, which is an investment, which is set and forget. You buy Coca-Cola, you hold it forever, and you make lots of money at the end of the day. Trading is different, because trading, you're trying to time the market, but you cannot. You cannot time the market. So how do you get around that? How do you get around the point of being unable to time the market because you can't predict the future? Charts can't predict the future. Every trade you take is 50-50. For that, we have a strategy, and we've put that strategy in place, which has got nothing to do with the charts. And it's a risk management strategy. And it's basically risking the same amount on every trade and trying to make more on your wins and lose less on your losses over time. Now, if you want to know more about that strategy, then obviously you're going to go and watch my videos, and you're going to get that strategy. It's at the end of every video, just about. Not all of them, but most of them. Most of them, I try and put the strategy in there. I know it gets boring at times, but it's a 3-step strategy. It's your business plan. It's the easiest way to make money. Now, what a lot of new traders do is they spend a lot of time looking for charting systems, believing that a win rate's going to make them money. They spend a lot of time looking for shiny tools in the charting systems, looking for indicators that are going to suddenly have a magic pill. I don't have a magic pill. Nobody's got a magic pill to give you that's going to make you money. And don't expect to take a small amount of money and turn it into a gargantuan sum of money overnight. There isn't anywhere in the world that you can actually do that. Otherwise, the world would be full of billionaires, which it isn't. There's only, I think, 1% of the world has got really wealthy people in it. So don't get caught up in that mess. Don't believe in that. It's going to leave you confused, and it's probably going to take all your money. Understand that retail traders make up a tiny portion of the market, and most of the market's made up of institutional traders, which have all the money. And believe me, they make up 90-95% of the market. They make up a huge part of the market. They know what they're doing. They're moving the big money. You, as a retail trader, you're trying to pick those liquidity areas. You're trying to find those spots and say, well, I'm in that liquidity area. What I want to do is I want to pick off a trade here because there's a support. There's a whole bunch of money here, and hopefully it's going to go up, and I'm going to take the money and ride the wave with it. That's what you're trying to do as a retail trader. You're trying to follow the process. So there's a couple of guys here that can mention to you a couple of fancy names of guys that can give you great trading systems, but there's so many trading systems out there on the market, and this you've got to be careful of as well. I mean, you can use the Wyckoff system, you can use the ICT systems, you can use the Ichimoku systems, you can use the moving average crossover system, you can use MACD. There's so many different systems that you can use in the market that will give you, or draw a line in the sand for you, so that you can use the charts to trade, because you need the charts to take your trades and to manage your trades, because that's what charts are for. Charts are there so that you can get into the market and you can manage your trade. Charts are there so that you can get into the market and manipulate your trade and work with your trade. That's what it's there for. but the strategy is something completely separate that you have to work with. So any system that you choose for charting, doesn't really matter what you choose. I mean, even if you have no system whatsoever, it really doesn't matter as long as you know how to manage the trade, as long as you have a strategy and a business plan to manage the trade. It's like I always say to new guys, and it's very important to understand this, very important. And that is, if you're going to start a business, you're going to start any business whatsoever. Now, today's the day, you're going to start a business. Are you just going to walk out there and just say, I'm starting a business and start a business? Or are you going to sit down and think, ooh, what kind of business am I going to start? How much capital am I going to need to start that business? How much profit am I going to want to make from that business? Oh, where am I going to want that business to be? What kind of business is it going to be? There's a whole bunch of questions that you're probably going to pose to yourself. Funny though, with trading, all you do is you see some guy telling you he's driving a Ferrari, and because he's driving a Ferrari and he's got a magic pull and there's money falling out of the sky, that if you do this, you're just going to make loads of money. It's just going to fall out the sky as well. And you're going to have the same as what he hasn't got, because he rented the Ferrari, he took pictures in front of somebody else's house, and he dressed in fancy clothes. Brilliant, isn't it? Absolutely brilliant. So that's what you're looking at the end of the day. You can't make money that way. That's not how it's going to work. And then you get into these charts and you get into these systems, and you find out when you get home that it's all about the fear, it's all about the psychology, it's all about the patience, and it's all about strategy. That's how you survive in the markets. The markets, they'll make you rich if you have a good investment policy over 30 years. You'll do well out of it. You'll do well out of it. And trading can make you do well as well. If you do well out of it and you follow the strategy closely, you will do okay. But you have to understand that with leverage trading, and people don't want to hear this, and they don't like it when I tell them this, and they get upset with me when I do. And particularly, probably other traders don't like to hear me say this because they're trying to promote their YouTube businesses and whatnot, perhaps. But 75% of traders lose money. And you might be one of them, because why do we think that we're going to be in the top 25%? You know, why does anyone think that? And on day trading, 99% of traders lose money. It's a fact, and you have to accept the facts, and you have to understand why that is. If charting was so perfect, if charting was the one thing that was going to make you money, little squiggly lines, if charts were the thing, charts were the one thing that's going to, this is going to make you the money today. There's no chance that you can go wrong, because this little chart is telling you that this is what's going to happen. Don't you think that everyone would know that? Don't you think that every single trader would win because the chart's supposed to do that? Because learning how to follow the charts is not a difficult process. It's not because the guy is not following the charts. It's because of the strategy. It's because of the fear, the FOMO, the patience, a number of things. You see, a lot of people, you can win a lot of trades because the trade's oversold, so you buy it. Just like the institutional traders do, you buy it and you have a target. If you have a real target, then you want to hit that target, number one. What a lot of traders do is they get in, they start winning, they make a small amount, they take the win. And you can do this because 7, 8 trades in a row, you're winning, you've won $80 and you're so excited because you win $10 on every trade. And then the 9th trade is going to take you out and you're going to lose thousands of dollars because you're going to follow it down to the pits, because you just don't want to lose. You don't want to show any losses because you're supposed to have a 100% win rate. And that's the problem, is you've won $80 and you've lost $1,000, and then it just doesn't work out. I hope that answers your question somewhat. Is it Michael Douglas? I can't remember the... No, that's an actor. What's that guy's name that was pretty good at trading systems? I think he was into the Wyckoff as well. I can't remember the guys' names, but I have got copies of their books written in my description, so you can have a look at that and just see if it's relevant. You can look for them on YouTube and stuff like that. You'll find them. Oh yeah, and the difference between Forex and, you see, be careful of the word futures, okay? I see these days people are trying to make futures into something different. And futures are just the thing that you trade with, whether it's contracts or no matter what, it's all futures that they give you. And what the brokers do is they buy these futures and then they sell them to you. So an index is an index. You're trading indexes, you're trading Forex, you're trading crypto, you're trading commodities, okay? And you're trading shares. That's it. And you can trade, obviously, a number of other products as well, bonds, things like that. Okay. Futures are the product that you're trading with. And the things that you're actually trading are indexes, Forex, crypto, commodities. That's not called futures. That's futures is all of it. It's like the general thing. Okay. But I'm not worried about terminology is not important to me, but I just see that it's going down that road as well. It's a bit like swing trading. You know, in our day, swing trading was you buy it at the bottom, you follow the trade up, it gets to the top, you sell it and you drive it down and you stay in the trade. It gets to the bottom, you buy it again and you stay in the trade and you sell it. That's a swing trader, a real swing trader. What we are is position traders. We position ourselves in the market. Once it reaches our target, we get out and we wait for the next position. We're position traders. We're not swing traders. Swing trading is something completely different. I've done it in my career, and it's not an easy thing to do. In other words, you trade one product, maybe two, and you follow it all the way up. It gets to a point, turning point. You turn the trade and you go the other way with it, and you stay in that trade up and down the whole way. That's swing trading. Okay. One of the better trend following market entry systems is to buy when a 3-period EMA crosses over adaptive moving average by one true range and sell vice versa. There's a number of great systems that I think are fantastic. I mean, the moving average strategy where the 8 moves over the 20, it's fine, you know, or, you know, depending on your time frames and that sort of thing. The stochastic systems, the MACD systems, they're all good. But that's just a system. It's just to manage your trade with. I would say keep it as simple as you possibly can from the start as a beginner for someone who's starting out. And try not to get overcomplicated with it. But I know you're all going to do it. We've all done it. We've all tried every system on the planet, and we've all looked for that magic pill. I looked for the magic pill, and it's embarrassing to say it. I looked for the magic pill for at least 10 years. You know, I spent 10 years searching out magic pills and charts and things like that before I realized that, well, that's silly. You know, charts not going to make you money. It took me a long time to get to that point. So yeah, it's not like I'm sitting here saying I'm a genius or anything like that. It really did take me a while to figure that out. I was also trapped in this, look for the charts, look, win rate, you know. I was caught up in that for many years. So in my 34 years of trading, probably only 25 years are worth anything. The first years, but suddenly, it's strangely enough, even with that mentality, I still managed to survive. I still managed to make a profit. I don't know how. I really don't. If I look back on it, I think I was probably lucky. Because, you know, to win with that kind of mindset is actually lucky. If you think about it. Okay. Next says he tested 9 different trend entries in the Kaufman. One was the best lot. Okay, that's great. That's good. That's good. It's actually great. Look, there's a number of, like I said, there's a number of different systems, and I think they all work at the end of the day. I haven't come across a system that actually doesn't work. I don't believe I have. I think SLA said he's going to go long on the DAX. I see there's a nice big green candle developing there for your SLA. Maybe it'll be a good long as well. You know, I've seen on a number of occasions that the people come up with systems and new systems and different systems and work out these things. You don't even need to backtest most of them because they've all been backtested, they've all been checked, and there's always someone using it somewhere down the line. I would say forward test a system. I would rather forward test it. Take a demo account, put the system on there and see how it works. And on a real-time situation. Because one of the things you have to know about the markets is they're alive. They're not dead entities. So while the market will remain the same from the dawn of time, the way it moves will change. There will be differences in different times of trading, okay? And certain systems will let you down at certain times. So be careful of the backtesting scenario where it looks great back then, but why is it not working now? Because something's changed. Maybe Donald Trump got elected and he's tweeting every day and it makes a big change to the market. So, you got to be careful of that as well. So I'm a big fan of what I call forward testing. I mean, if you test something that you want to try out for a week or 2 weeks on a demo while you're trading with your old system, then you can see if it looks good, if it looks like it's going to work for you based on that, rather than the back test. The forward test tells you, well, if I was to trade this is what I would do without any knowledge of what happened in the past. And then you do it on a complete blank and you get much more information from that. That's just what I do. I don't like back testing. As far as I'm concerned, it doesn't work for me. I'd rather forward test it. And forward testing, because I know that I'm testing the reality of it. This is what actually is going to happen, and I don't know what's going to happen. Let's see if this is actually going to do the job. And then you'll find out if it does the job or not. And then you can see for yourself. But systems, like I say, all of them work. For me, I'd rather just look at a chart, look at the price action, look at the support and resistance, look for the liquidity, follow the liquidity, take the trade. Overbought, oversold. I like overbought, oversold. You'll see sometimes I'll bring up an RSI, a relative strength index. Because for me, relative strength, that works. And for example, if you take the Bitcoin trade, this better not fail on me now because I'm going to bring up a relative strength index. It's probably oversold in a big way, because you can see it just by looking at the chart. And yes, it's oversold in a big way. You see there, it's oversold. If it's below that 30 or above that 70, it's generally way oversold. And that's oversold, you see? So it's oversold, not to the depths of the puts, but it's oversold. It's on about 27, and it's broken back up into the level now. And that's actually quite important because it's showing signs of wanting to go back up again. So if you want to use anything, an RSI is probably one of the best tools in the world to actually use. But yeah, if you have systems, guys, list them here for the guys so they can see them. I don't mind. Everybody can try something different. Everybody's always looking for a new shiny tool, so you might as well look for it as well. And see if there's anything out there that works for you or something that can work for you. Hello, Billy. Ah, good. USA, what a great place to live is Billy. It's good to introduce yourself, guys, because I see some of your handles here are like slightly different to your real name. And it's good to know the names because it's a crowd we got here. It's a group of guys and women and ladies, and who I don't think there's any children here, so it's probably old men and old ladies and women and ladies and middle age and whatnot. So yeah. Carl says, just a funny question. If you found a winning system bulletproof, would you share with the world? Carl, why not? Why not? Why wouldn't you share it? It's there's so much to go around, and no one will believe you anyway. So don't worry about it. And it's not like the whole world believes in what I'm saying or what the next guy's saying or his system or whatever. So it really doesn't matter. You're always going to get an opposing view. And yeah, there's nothing wrong with sharing it with the world. The big problem with any system that's going to win every single time, the first thing is it's never going to exist. It's just never going to exist. And the reason for that is it's not mathematical. You're dealing with human beings who are buying and selling. So that perfect system is never going to come about in the first place. But if it did, if there was a perfect system that you could trade in the markets, if there was something that you could say, well, I'm going to take this trade here now, and everybody else is going to take it as well because they know it's the perfect system, and everybody buys, what you will end up with is no market. What you'll end up with is a flat line, because to have a market, you need half the people to be wrong. In fact, more than half the people to be wrong for someone to make a profit. So it can't work. It just can't work. A perfect system cannot work. A perfect system is a disaster for a market because it's all about traders. It's all about buyers and sellers. Someone's got to make a profit. Someone's got to make money somewhere down the line. And that's why there are no perfect systems. There's never a perfect system. You know, if you really want to make money in the market, if you really want to make money out of stocks, the only way to do it is firstly to understand you're going to buy companies, shares. Secondly, to understand that it's time in the market, not timing the market. And thirdly, to understand that you're going to invest in those companies for 30 years. And so if there's anyone younger watching this channel, then think about that. Definitely think about that. Think along those lines, because trading is fun. I do trading because I love trading. I do trading because it's fun. I do trading because you can make some profit out of it. But the real profit is from the investments. And even in the trading, most of the profit comes from those trades that are long-term. Nick will know, he does it as well. Trade the VIX. Hold the VIX. Hold it for a long period of time. It'll spike. It'll make you a lot of money. You're holding it. You're not actually, you're trading it, but you're actually not. You're actually holding it with a view to, I know it's going to make me money somewhere down the line. And I kind of do that sometimes with trades as well. So don't look at it as you can time the markets. Absolutely no one can time the markets. That's what makes it a great market. No matter how much you backtest it, no matter how much you forward test it, it's still that market. And there's still buyers and sellers in that market. And they're always going to be there. And there's always going to be someone who's going to profit out of it. This is the Euro Great British Pound. And look at this. There's your trend support. It's hit that trend support, gone up, come back, and it's hit it again. But look at all the tails that it's developing. So read the candles like this. It's part of price action. Read the candles. Nice long tail, nice long tail, nice long tail. Well, there's an undecided one, but there's a couple of nice tails. You know, those normally tell you that all the buyers are getting back in, all the buyers are getting back in. So there's a big area here where all the buyers keep getting back into the market. So that's an important area. Keep an eye on it. But by the same token, there's a big resistance here and there's a pincer top at the top here. So what I'm looking at is a big fall from this level, but we shall see. We shall see how that goes. This one's already taken out. You see, that was a supply of money, and it shot up, came back, took that money, and it went up again. So that's now gone. So we can actually remove that now. We don't need that in there. Don't have to leave things in there forever. That's not important. Have you taken the DAX trade yet, Sir Lancelot? As Nick says, entry is less important than managing it. Most people suck at managing the position. That's the whole point that I've been making for the whole channel. The whole channel is about managing your trade. You know, entry, you can have a blank chart. Entry, enter the trade. Say, I think this is going down. Take the trade. Then all it's about is managing the trade. All you got to do is manage the trade. Entry is totally irrelevant. It's an irrelevance. Entry actually doesn't matter at all. You know, you just need to get into the trade and decide which way it's going to go. The difficult part about entry is, of course, deciding which way it's going to go. Because if I give you a blank chart and I say long or short, most of you will stand there and go, ooh. I mean, I would. It's so difficult to choose which way it's going to go. If I toss a coin and I say heads or tails, you don't know what it's going to land on. It's a wild guess, heads or tails. Okay. Same with trading, long or short. You got to take the guess. But if you were able to manage that coin toss once you're in it, it would be so much easier. But you can't, because it just lands and it's a bet. But with trading, you can manage it. With trading, you can manipulate the trade and work around it. And that's what people can't do. People don't manage trades. People expect the charts to predict the future. People expect the charts to give them a win rate. People expect the charts to make money for them. And that's where they go wrong. The charts don't make you money. Charts don't give you win rates. It's you. It's all about how you manage it. Bonnie asked if the DAX is hitting a level. Yes, it is. Entry is less important. Yeah, perfect system would be win 6 trades from 10. Carl, did you know that in the trading game, for those traders that are trading properly, we're not talking about scalpers now that are making $10 a trade and then losing $1,000 and stuff like that. A proper trading system or proper trading strategy. Any traders that are winning 6 trades out of 10 and doing well from it are probably some of the best traders in the market. It's, you know, to win 6 trades out of 10, you're looking at either a really lucky trader or an extremely good trader. Okay. Somebody mentioned the idea of the DAX. Let's just talk about the DAX quickly. Where was it? DAX, German DAX. There we go. So here it is then. Okay. So Lunch is going to take a long on this. And if you look at it, it's been trading in this range for quite a while. So it's up, down, up, down, up, down, up, down. So there's the DAX. It's in that range, and it's been in this range for a really long time. It's not just yesterday they got into this range. So it's now hit this support level quite hard. And if I look at this support, let me just take these yellow lines out because they're probably confusing the earth out of everyone. We don't want to do that. Let's just leave it as there it is in its range. What I've done with that red line is I've kind of drawn it in on a 4-hour support basis. But what I've done with these rectangles is I've drawn the daily support level in and I've drawn the daily resistance level in just to give you guys an idea of how it's bouncing around in that level. So support, bounce, resistance, drop. Okay. And now it hit resistance up here and it came straight down into this level. Lovely stuff. Absolutely perfect. So what have we got here? What we need is a green candle coming out. Nice green candle coming out. Now, if you want to be 100% sure of this trade, if you're a little bit of a cautious trader, you're not risque, then you can just take a trend line. This is what I always do. Just draw it through in the range. So now you've got 1, 2, 3. There is 3 touches there. So that's your short-term trend. And then just look and see if it breaks through that level. Let's see if it just breaks to the upside. Then you can be less risky on the trade and you can be sure that it's going back to the upside. For the more risky traders, you don't need this line. You can just wait for the green line to come out of the support level, close, and then you can take the trade to the long side. And for those of you that are really risk adverse, you can put an RSI in. You can have a look at an RSI. You can say, okay, it's overbought, so there's a good likelihood that it's going to go long. But how am I going to manage that? You can actually take that. You can't put it in there, sorry. Put a new one in. Okay, no problem. You can take that, draw in there, and same scenario as the price going through there. You can actually wait for the RSI to break to the upside on that trend. And when it breaks to the upside on that trend, it's changed direction. It's going the other way. The RSI will tell you that it's going long, and then you can take the trade based off the RSI as well. I do like the RSI. I always have. All my trading career, I've liked the RSI. But as you know, I took all that stuff off my charts so that I can see things more clearly, more open, because at the end of the day, all of those little tricks really don't matter. As Nick said earlier, it's all about managing your trade. You just feel good because you've picked a trade based on some kind of system. That's what it's about. Lean hog market had a beautiful buy last week that failed quickly. Coral deletes the question. Okay, that's cool. No problem there. So it's interesting. Yes, so the DAX does look like it wants to go up. Now, you've got to keep in mind, guys, if one index is going up, then there's a good possibility of the other indexes going up. Now, I'm not talking about US 500, NASDAQ, and Dow, for example, because those always work together. Now, the S&P 500 fundamentally, now this is the fundamentals that you must keep your ear to the ground on, not the CPI and jobs figures and all that rubbish that comes out every week. Keep your ear to the ground. The S&P 500 or the NASDAQ, they're waiting for NVIDIA to release their results. And when NVIDIA release their results, they're either going to be to expectation or not to expectation. What's believed in the market at the moment is that their results will not be to expectation. So therefore, a bit of pressure on the markets. But if they release their results and they meet expectation, or they're good, then the markets are going to fly to the north and go up. In other words, the oversold condition will turn around and we'll get a positive condition. But if the NVIDIA results are as expected poor, is it already baked in? Have the markets already decided that it's pretty poor, so we've already gone poor and it'll just get a little bit worse? Or is everything just waiting on that? You're going to keep your ear to the ground on those kinds of scenarios. So that's what these markets are waiting for. Now remember, the S&P 500 is very much based on the NASDAQ, the Tech 100, because the Tech 100 pretty much puts a lot of money into the S&P 500. So the S&P 500 will look pretty similar to the NASDAQ. So that's the S&P 500. That's the NASDAQ. There's not a lot of difference in the chart shape. Whereas the Dow will look slightly different, but it's also in the S&P 500. So you're still going to get the same movement. So those three, particularly, and perhaps the Russell as well, will move in the exact same direction. You're not going to get much difference in that. There's no point in trading all three of them at any one time. You can choose which one you prefer to trade. I prefer the S&P 500. And then you've got all the other indexes, the CAC, which is the France 40. You've got the DAX, the German 40. You've got the UK. You've got the Spain. You've got the Japan. You've got all these different markets, the DAX, all of them, right? But when the S&P 500 moves in a direction, you will find very frequently that those indexes will move pretty much in the same direction, not to the exact amount, but they'll kind of flow along the same way, maybe a bit delayed or ahead of the time. So the general market will follow the general market as such. So don't think that when the S&P is crashing, that you can now take your case of money and pile it into the DAX and go long, because in all likelihood, the DAX will also lose some ground with the S&P falling or whatever the case. So just keep an eye on that and don't get caught out by those kinds of strange and silly mistakes. Yes, NVIDIA is releasing later on. You know, I have investments in NVIDIA and it doesn't worry me because most of it was purchased at a very low price. And I haven't even looked at the price. It doesn't even worry me. And that's the great thing about time in the market and investments. You just set it and forget it and leave it and don't worry about it. Once a month I go and I have a look and I just make sure that none of these companies are looking like they're going to fall off the bus or fall off the cliff or just disappear completely. I don't even put stop loss on the investments. As far as I'm concerned, you cannot time the market properly for that sort of thing. And if you get out of your investment because you think, well, I'm just going to get out and then I'm just going to get back in when it gets to that point, the minute you get out, it's going to turn around and go up, and then your investment's going to go off and leave you behind. And that's actually worse than losing money. So the investments, I leave them. I leave all the money tied up in there. Whether it goes up or down, seriously doesn't matter to me. It moves around in there, and over the 30 years, it just keeps on going up. So don't worry about it. I mean, if you look at the S&P 500 for the last 100 years, you'll see there was a few dips, which was the crashes. But in general, the chart just goes straight up. And that will always be, no matter what, because not only are the companies growing, not only is there more money in the market, but also there's inflation. And prices have to go up with inflation. And that includes the index prices. That includes everything else. The prices have to go up with inflation. They're not going to really go down. So as money becomes less valuable, the index amount has to go up over time. Over time, the price has to change, which is why I was so surprised that gold actually stayed on a very low footing for about 1 million years. I mean, gold was on $800, $600. Then it was on $1,000, $1,200. Then it sat on $1,600 for about 100 years. And now eventually, after all those years, it started to make some moves and some decent moves. And somebody the other day actually said that gold should go to 7,000. Quite far away if I look at this chart. But they're not far off, because effectively, if you look at where gold's been over the last 100 years, it really should be at 7,000. It really should have moved, and it hasn't. It's just been trapped at these levels. So for the first time in many a decade, it actually decided to start moving this decade, and it's moved nicely. So it's come from that 2,000 level. It's doubled in its value, which is very unusual for gold. Gold never does that, and here we are. Okay, so yeah, it's pretty much moved in the right direction. I still don't think it's kept up with inflation like the S&P 500 and many of the other entities, but there you go. Gold is the flavor of the day at the moment, and it's doing okay. Of course, what has moved is my non-favorite, the Bitcoin. That was the most surprising one to me, because I believed that there was a pyramid scheme, that it was all built on fresh air, and it grew to insane heights. But people get bought and sold in crypto. Let me tell you, one day they're a crypto millionaire and the next day they're living on the street. Is kind of how it is with crypto at the moment. It's kind of insane. If you treat it like a proper strategy and you treat it like trading, then you might survive crypto. Investment in crypto, there's a lot of guys out there. One minute they're doing well, the next minute they've lost all their money. I just can't get it. Crypto is a funny thing for these guys. But I don't invest in crypto. I trade it, but I don't invest in it. My investments are in shares. They have asset value, they've got dividends, they've got all those nice things that you want over the years. And I don't have to look at them and worry about them. I think, is it crashing? Is it going to be a bubble? What's happening? That you can do with trading. Most of the larger companies purposely get the analysis to lowball their earnings. At the end of the day, you have to remember that we are trading against institutions. And those institutions are going to do everything in their power to win. It's a game. And if they've got ways and means to make things happen, they will use those tools at their disposal. So we as retail traders, we don't have all those tools. We don't have all that stuff, all that power, all that information. So all we can do is go with the flow. And for example, if you're going to wait to see what happens with NVIDIA, yes, it's going to affect the S&P 500 immensely. But there's no way that you and I can call it. There's no way, because even if you know, hey, they're going to have bad results, that's already baked in. Or if you decide, you know what, they're going to have good results. Let's say they come out with good results. So the results come out and the market will start moving and you think, there we go, we're in, we're going north. And then there'll be some underlying issue which says, yes, but the results are good now, but they're not going to be so good in 6 months' time because of X, Y, and Z. And it'll just bring it all down just as you've put all your money in. So, you know, it's very difficult to call those moments. But all I say is if you are trading in the S&P 500, for example, not NVIDIA as such, NVIDIA as an investment, but if you're trading in the S&P 500 or the NASDAQ and you're looking at it and thinking, okay, I'm confident this is going to go long, just keep your ear to the ground. Bear in mind that there's going to be a bit of a hoo-ha when those results come out, and it's going to go either way. It's going to jump around a bit. So just keep it in mind, so to speak. Just keep it on your mind and understand what might happen. The DAX trade, you see there's a bit of a hammer developing here, which could be an issue for the DAX. So for those of you who are thinking of taking a long, just make sure that candle closes up above here. You know what I would actually do? I'm just going to move this red line here. I would wait until it goes through that line above that prior high and get the trade about above 23.5, just to be safe. Just wait for it to go past that prior high, because you know the question I've got here is, what if it see if I can draw here or not. My issue is, what if it just go here. Yeah, that's fine, that is in the right place. Are we able to draw? No, I haven't drawn on this thing for a long time. I must find the pen. Yeah, text. I used to use to draw. It doesn't really matter. But anyway, there was a video I had here to draw with. But if it goes up and then it comes down from here again, there's a good possibility of that, because you can see it's come down, gone up, come down, gone up, come down. It might go up, come down, go up, come down. So I would wait for it just to go past that prior high before making any decision to go long on that particular trade. Just keep that in mind before you take any particular trade, because that is going in that direction, and there's a good chance of it doing that, just coming up to here and pushing down again. So when I say wait for the green candle, also just wait and see. I mean, could easily be an issue on Bitcoin as well, but I've got this trend running in here. And I'm looking at a bigger picture here, thinking that we're going to get some kind of a run back up to the top here. In all likelihood, we hope so. Hopefully it'll break this 95,000 again. It took quite a knock yesterday coming down here. That might actually still work out. I just want to see if the US 500 is the same as the DAX. It's got a similar sort of picture to it. I'm seeing a sideways sort of head and shoulders here, which is a bit tricky. There is a level there that it could get past, yeah. So 6697 goes past 67, there's a chance it'll go up, and that is in confluence with this, what was a trend support and is now a trend resistance. So I could go back up here, retest, and then come down from there. That would be quite interesting. Yeah. So bearish, yeah, could be bearish, could be. So if Nvidia's results are pretty bad tonight, you could wake up tomorrow morning with a German DAX down and with the S&P 500 down. So if you are thinking of going long on the DAX, I know Sir Lunch, you were thinking of it particularly, just watch yourself there, just be careful. Just remember overnight, this will close for about an hour tonight. And if you're sleeping, you might wake up tomorrow morning with a different scenario. I like this Euro Great British Pound. It's looking rather interesting. Maybe for a short trade to the downside. Let's actually just see if it's going to go. Let's just have a look here. Sort of with a stop loss up there. Take profit could be there, but it could also be there. That might be a trade to look at. Not just yet, but soon. But soon it's breaking to the downside. Looks like it wants to come down. I'll actually wait till it breaks these prior lows, which is, let's draw that line in just for interest's sake. If it breaks these prior lows, that might be worth the short. So yeah, let's take that down to there. Okay. Wait for it to break those prior lows. That might be a good, it might be a good short. There we go. Interesting one. Interesting one. Anybody else looking at trades today? What you got going? There's a lot of things that we haven't looked at here on this watch list lately. Let's just, we'll just use this Canadian dollar one. Spain. Short. Definitely. UK. Definitely going short. Oh, have you guys seen this on the UK? Oh my word. Okay. Look at that. That's not Head and Shoulders, then I don't know what is, eh? Wow, make it red, by the way. And that projects all the way down to about 9,300. It projects it all the way down to the bottom here, which is another level down here. So the UK looks like it's going to come down with quite a bang. UK 100. That's quite a big fall looking there. Yeah, if I was going to take a short on any of them at the moment, it would be the UK. Now, the question is, with the UK going down, isn't the DAX going to go down as well? Ah, interesting, eh? Interesting. But this looks like it wants to play out big time. Hello, random channel. So Bitcoin, I can't really give you the fundamentals on Bitcoin because I'm not an expert on fundamentals of Bitcoin. Bitcoin does seem to be following the S&P 500 and the general market somewhat, and it seems to be a little bit iffy because of the market. But you have to remember one thing about crypto is just traders trading against traders, and traders are deciding the price. There's a lot of hype going around Bitcoin at the moment, and the hype is that it's going to go short, so that's what you can expect. There is a flip side to that hype. There's a lot of people calling it extremely long. Some people are calling it to 200,000. Some people are calling it to 1 million. So what can you do? So I've taken the long trade on it at the moment. Is it a mistake? Well, I don't know. Random code. I'm thinking looks good to me because for me, it's way oversold. It's hit the trend support. I look at the green candle going up, and then actually on the cash account, I took it at around 90,000, and at the moment it's around 91,300. So On that account, it's done well. On this account, we took it more towards the 90,900 or something. So we're about 1,000 points different. I just took it here so that you guys can play around and see it as well. But on my main account, I actually took this morning at around 90,000, which is a bit early. I'm a bit risky and things like that. I should wait, but I didn't wait. But I'm in the view of I can sit in the drawdown. It's okay. I'll sit in the drawdown if it goes down. We'll see if it goes back up, because I think it will go back up. I'm not an investor of crypto, but I do think it will go back up. On the flip side, on the NASDAQ, like you were talking about now, sorry, I was just looking at the UK 100 because that looks like a big head and shoulders. On the NASDAQ, it's more like everyone's waiting for the, it's the same as the S&P 500 as the way. By the way, it's not much different because the NASDAQ makes up a lot of the S&P. But what I'm looking at with the NASDAQ is everybody's waiting for the NVIDIA result tonight. And I think what's happened is everybody's expecting a poor result from NVIDIA. So they've baked in a bit of poor performance on the NASDAQ and a bit of poor performance on the S&P, which is part of that whole scenario. So the flip side is if NVIDIA releases good results tonight, then this is going to fly. It's going to go really well. The doubts are that they will. And then it's just a question of if the results are poor, it's probably already baked in. But then how bad are the results? How really bad are they? And could it go worse? And could it get worse? How much further could this fall? So I think that's where the pressure's on. The pressure's on the markets because is tech still doing so well? Is it in a bubble? There's a lot of question around that. And that's what's causing the markets to be under pressure at the moment. You have to understand about the markets. And this is something that I've picked up over the 34 years of my trading, is that most traders get into the market and they spend, and if they get into the market at the right time, they spend a couple of the years only seeing positive results, only seeing the markets go up. They don't see the markets go down heavily. So if you haven't seen the markets go down heavily, when they start to go down a little bit, you start to question things. Why is this happening? What's going on? It's normal. These are the normal things in the market. This is not even in correction yet. It's not even in correction yet as far as I can see. It's pretty much still holding above a range, and it hasn't gone anywhere. I mean, even if we go, I think the S&P 500 might still be in the bullish range. It might still be bullish. I have to have a look. Yeah, it's still, actually, if you take the trend all the way from the bottom, you know, if you look at the technicals, the S&P 500 is literally still bullish. It's not even in correction yet, but the slightest turnaround and the slightest move will scare a lot of people that haven't seen anything remotely where it starts to come back. This, let me not scare you guys, but this could quite easily, and I've seen it in the past, go from this 7,000 level, 6,924, didn't quite hit the 7,000. It could go from this, and it could go all the way back to 5,000 in an instant, just like that. So you just haven't seen it. You just haven't seen it happen. That's why I've been very cautious on these Fridays, where the Fridays have been finishing down, because normally these things start happening on a Friday, and on a Monday morning you wake up and it's all gone pear-shaped. So just keep your eyes on it. These markets can go down, and they will go down. It's the normal thing. It happens. That's what markets do, okay? They correct. They don't go up in straight lines. And you need that correction to make that purchase. So, for example, why am I buying Bitcoin? Why am I buying into Bitcoin on my main accounts? Because it's gone all the way to 125,000 and it's come back to 90,000. So my brain's starting to tell me, wait a minute, this might be an opportunity. How far is it going to go? It might go back to 80, it might go back to 70, I don't know, but it still looks like an opportunity. We've had a good correction. That's corrected from 125 to 90. That's quite a bit. That's a decent correction. So now I'm starting to nibble at it and think, wow, this looks like a good trade, because there's all possibility that the next time it goes up, it might even go past 125. It might even go to 200,000. I don't know. And that's why we look at trades that way. So yes, that's what markets do. They're correct. Okay, so we did have Euro US dollar on here. I've obviously taken it off. So let's go back to the Euro US dollar and just have a look here. Okay, so let's take the original line through here. Take that original line through there. There's your Euro US dollar. Okay, it went all the way up. Hit a high, bearish trend down. It's been in that bearish trend, up, down, up, down, up, down, up, down, up, down, up, down. Oops, up, broken to the upside. So this is what we call a breakout. It's broken out and it's broken to the upside. What it's doing at the moment is in all likelihood and all probability retesting. And what it's going to do with that retest, and just remember, charts can't predict the future. I can't predict the future. You gotta manage the trade. That's how you're going to make your money, by managing the trade. But in all likelihood, what it's doing, coming back to retest. Now, on top of this line, we've also got this trend support. This standard support at the bottom here. That support is an area where money keeps getting taken. So it's hit a number of times. There it broke through a little bit, but it came back into that range. So it's within a range area, which it's broken out of a couple of times, but it stayed within. And now it's broken through this general bearish trend and broken back to the upside. So we thought, well, it came off the support and it was looking like it was going to go back up. But now what it wants to do, very often it does this, it's coming back just for a quick retest, probably going to retest this level and then bounce back to the upside in all likelihood. Okay. Other thing to look out for, I don't see a double top here. I just thought there might be a double top here, because if you get a double top, then you would be looking at that W effect. Might get a double bottom. Get the double bottom. If it comes down to here, goes back up, then you might get the double bottom. But yeah, okay. We shall see. At the moment, I'll wait to see what happens here. So if it comes down, retest, gives a green candle back up, then it's long. If it comes all the way down and goes back up, you've got the double bottom, then you wait for it to break the W and go up. That's long. At the moment, it's kind of bearish and kind of short. We wait to see if the retest works or if it fails. And then the US dollar CHF, the US dollar CHF, and there's your US dollar CHF, okay? So let's just put that there. And let's just put that there. Let's just make it a little bit tighter because it's in that range. There's your range. It's in that range at the moment. All right. What's it doing? Take this, take the trend line. You simply draw it through here. Okay. We just have a look at what we've got here. Now, the US dollar CHF has bounced off the support. There's the support, and there's the support, there's a support, there's a support. There's an area of money here, so it's bounced off that support. Confirmation is in. Long trade, it's breaking above the trend resistance, which is the downtrend. It's breaking to the upside. Looks like it wants to go up and hit the main resistance. So this trade looks like it wants to go from here all the way. Yeah, that's the wrong way around. Oops. Make it a long position. Looks like it wants to go all the way from here to there. Now your problem is, where do you want your stop loss? Stop loss, I suppose you could put it there, okay? Just below that line, just below that level. Or you could pull it a little bit further and then work out your size of your trade to there. Long trade up to 0.81. There's your long trade all the way back to the top. Looks like a decent long trade. And yeah, that's your US dollar Swiss franc. Okay. The Euro US dollar, wait a bit maybe, just check what it's going to do. I think this one you can actually take this trade. I think it'll actually work out. I think this one actually be a reasonably good trade to take. Not bad in the slightest. Okay. On bearish check, OpenAI already started hitting a bailout from the US government. I think the AI, Fani, I think the AI is going to get, I wouldn't say bailouts, but they're going to get a lot of funding. I mean, it's a bit like Tesla. They got so much funding to create that car and build that company because the world wanted electric cars. So I think there's going to be a lot of that. I think AI will get a lot of funding to keep it, to grow it. But yeah, US dollar JPY set up alert to go long. Carl, just be careful on the US dollar Japanese yen, in the sense that they don't like it when it goes above 150. Okay, so let's just have a look here. US dollar Japanese yen. It's at 155. I get you. I like your trade. Definitely you're on the right track. Totally. Yeah. Can't argue with you on that at all. You got a good trade. Set up to go long. You know, the only thing that would hold me back from taking this Japanese yen trade is the mere fact that the Japanese government does not like their yen to be above 150. So that would be my only concern for it. But it's in trend, it's moving up, it's looking strong. It's not moving up in big chunks, but it is moving up. Probably it could go to 160. It's been there before. It could go to 160 if it pushes hard enough. Yeah, okay. But just watch out for that. Keep your eye on it. Very important to keep your eye on it. Let me just see, is there a level here? 79728. There a double top? Which means top. No. Or bottom. No. Head and shoulders. Ooh. Okay. Yeah, on this Swiss franc, just keep an eye out for this developing. I hope the head and shoulders doesn't develop. You know, as you look at the chart at the moment, it looks like it's just going to break to the upside, but there's just something here that's nagging me. As there's a shoulder here, a big head, and another. Now this could easily develop into a shoulder, and if it does, that could be tricky. So just keep your eyes open. But if it continues here, it should be fun. Okay. I always see these patterns everywhere. I go to sleep at night and I see head and shoulders patterns. Crazy. You go insane after 30 years, I promise you. Hello, Elaine. Good to see you. Wonderful to see you. Look, if you guys missed the beginning of the show, where I did point out how to secure your profits before the market strikes back, it's a couple of minutes at the early part of the show where I've gone over that. Every live show, as you know, I go in on with a little bit of information, a little bit of training, and a little bit of insight into the markets, of things that I've learned over the years and things that I've picked up over the years and things that have happened to me over the years that might help you. So in every single live show, I'm trying to bring something into the live show that helps you with that. It'll always be at the beginning of the live show for you guys. I hope you guys have all liked and you've all subscribed and you're all here and all part of the show. I hope you've all liked the video, and it's good for us. Keeps us in the fray. No, but I'll tell you what is, we don't have Costco's, but I'll tell you what we are getting is Walmart purchased our Macro and Game Stores and Builders Warehouse and a number of companies in this country, and they've had them for a while. And now Walmart itself is coming into the country, and we're not sure where or how or what they're doing, but we're getting the Walmart here. We don't have the Costco's there. Yeah. Be interesting. Good stuff. Yeah, I'm actually, I don't know, I might move the time of the show a little bit, because I do see that obviously it might be a bit early for a lot of people, and I might need to move it around a bit, but we'll see. We'll see how we go. We'll see if we move it around a bit or make it a bit later. With regards to that, because I see there's a difference in time now because the time's moved in Europe. But we'll see how that goes and take it from there. But on that note, I think it is actually time for me to go. Time for me to move on. Otherwise, these videos, these live shows will be like 4 hours long, and I try and keep them to sort of 2 hours, and it's enough, eh? Yeah, Euro US dollar, just wait for something to happen there. Random, just keep an eye on it, just keep an eye on it. And it is slowing down, but just see what it does, and follow the general rules, and just trade it that way, and then see how it goes. Let's hope our Bitcoin trade works out. I don't know how many of you are or have got the nerve to take the Bitcoin trade, but I'm in it, and I'm looking at it. We could go into drawdown. It could still go further. I'm not expecting it not to, but I'm kind of at the point of I don't want to miss out. So it's at a good level, taking a chance on it, and we'll see. We'll see if it gives us some money back or not. But guys, hey, thanks for watching, and I hope I'll see you guys on Thursday for the next live show. That one is at least much later at 1400 GMT +2, and we'll see how that goes. And until then, I hope you guys make lots and lots and lots of money, and you guys must all have a great day. Make good money. Have a nice one. Don't forget to come back and watch the other videos as well. You notice I'm putting out a few shorts as well, just to, I'm not doing them with my personal face, but just some interesting information here and there. So you can watch those as well. They're a bit of fun. Cheers, ciao, and keep well, guys.